A lot of stocks that are in focus on the back of earnings as well. SPP Global Ventures posted a good set of Q2 numbers. Retired Major General O.P. Gulia, the CEO of SPP Global Ventures, is joining us now to discuss the earnings fine print. So good afternoon. Thank you so much for joining us. Well, numbers look good. Of course, it's a recovery that we have seen on a YY basis. But give us a sense of how demand is right now, considering that a lot more has opened up in the country. Will the second half of this year be better than the second half that we saw last year? And what kind of growth are you expecting in FY22?
Hi, Kamal. Thank you for giving this opportunity once again to SPP Global. And we are very happy to announce the results of second quarter. As you said, the demand is picking up and textile and apparel industry is very buoyant about the second half of the FY22. And as you see, on quarter, there has been a huge growth in the textile and apparel sector, and so is our company. Today we are here to discuss our results of quarter second, and if you see these results, they are stupendous. We have been sustaining the growth from one quarter to another since last 4 quarters continuously. And this time, if you see our results, we have posted very stellar results of EBITDA with around 23%, which has been on increase quarter on quarter from 16.4% in quarter 4.
We do have those, yes sir, we do have those numbers, your P&L numbers, the revenue growth of 11%, margins at 23% as you were saying. But now the street and the investors would like to know what is the plan ahead. If you can give us a sense of what type of growth that you're looking at in terms of revenues and margins at 23%, are they sustainable? Because in last few years, your margins have been around that 15 to 17% mark.
That's right. Now, why it is sustainable? Because suddenly there has been a boom in every sector, and so is in textile sector. And we expect this demand to continue, and the results will be further better because our Oman expansion has just got completed about a month back. 15th of August, we declared the COD of our Oman expansion, and that will add hugely to our revenue and margins in future. And we are looking at around 30% increase in our revenues because of the Oman expansion. And that, along with this present results, we are looking at PAT to go further from 40 crores, which is around 10% now. And we will be posting much better results because of the buoyancy in the entire sector. And there are other factors like international market, China, and other things. So India as such, and so is SPP Global, has a very buoyant future in next third and fourth quarter.
So you are looking at the 1800 crore revenue mark this year as you had guided for earlier. And what happens to FY23? You look at 2500 crore or you're looking at a lot more? Because in FY18 as well, you did close to around 2400 crores revenue.
That's right, Mangalam. We are looking at 18 because in third and fourth quarter, we will get the full expansion of our Oman project. So only 2 quarters. Whereas next year in FY23, these Oman plant will be fully operational and this revenue is going to go up beyond 2,000 crore. That's for sure. Yeah.
And what does your order book stand at? Last time you said it was closer on that 5,000 crore mark. And margins, this quarter 23%, for the first half it's 20%. You said it will sustain. How much of that is on account of the RODTEP scheme and how much is that on account of technical textiles? What's the contribution?
You see, the government has announced these 3 schemes, that is the RODTEP and also ROSCTL and lately the PLI. And looking at this PLI, we have also gone into the full value chain of textile, and about a month back, we declared that we are going to venture into technical textile. We are investing almost about 100 crores in that, and the production will start in next 12 to 15 months. And we are looking at around 5,000 ton turnover or the production every year from technical textiles. So that will further add to our revenue in the coming year.
How much would that revenue be, sir, on like approximately 12 to 18 months for that production to come on stream? When you start, what kind of revenue addition do you expect from technical textiles?
You see, we are looking at around 200 crores turnover from this venture, and we are initially going into the protection clothing and the something like fire retardant and technical textile in sports and medical. So basically, three fields we are targeting from technical textile.
And what does your balance sheet look like right now? Because you're going on to this capex, you just opened a plant in Oman and all of that and stuff. What's the kind of debt on your books? What's your finance cost? How does the debt repayment pan out?
You see, that is, we are reducing and serving the debt year by year, and it is on the decline now. Soon we will be having around 1,000 crore debt, which is today around 1,200 as term debt, what you call it. So as the Oman and this Jalawad, both our plants are going into it, the debt is reducing year by year and quarter by quarter. So we'll be much better off after FY22.
Okay, so 1,000 crore debt is what you're looking at by the end of this year, you said?
Yes, that's right. That's right. That is what I'm looking. Purely the term debt I'm talking about.
Okay. I just wanted a sense on margins yet again. Are you able to pass on the entire raw material price hike? Because again, we've seen that cotton prices have gone up substantially. Other prices have been going up, especially they are hitting the manufacturing industry. A lot of big players are talking about that. You are able to sustain margins at these levels despite the price hikes that we've been talking about?
You see, these go correspondingly. As the cotton prices go up, so would be the yarn prices because of the demand. Suddenly, all the looms have opened up world over, and there is a huge demand of yarn across the fields. So the yarn prices are also keeping pace along with the cotton. So the margins more or less sustain wherever, whatever prices the cotton we are going to get. And the new season has just started, so cotton prices are also going to stabilize and come down what it is today.
All right, thanks a lot, sir, for joining in and giving us all those details. So that's the management of SVP Global, looking at maintaining that 1,800 crore in terms of top line guidance for this year as well. Margins above that 20% mark will sustain. Believes that maybe the next year with the new capex coming in, the revenues could cross that 2,000 crore mark, closer to 2,300 odd crores. The street like that, stock at the high point of trade. We take a short break on that note, come back, we get Ashish Kya.